This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. My guest today is Hugo Renaudin, CEO and co-founder of LGO Group, a digital asset exchange for institutions. Welcome to the show, Hugo.
Thank you.
Where are you based, Hugo? So just before we start off with, let's check in with yourself and your health. What is the situation like on the ground for you in terms of the COVID-19 pandemic?
Yeah, so I'm actually based in New York. So I'm at the center of the epidemic, and the company is French and American. So half of the team is in France, and the other half is in the US. Listen, luckily everything is good. I'm fine. My family's fine. The whole team, the whole LGO team is fine. So it's been a bit of a disruption to the way we live and the way we operate, but everything is going as well as it could be.
Oh, I didn't realize you were actually based in New York, which is really the global epicenter of the current carnage, really, isn't it?
Yeah, it is. It is. It's kind of crazy to see the streets of Manhattan, which are completely empty. It's eerie, but it's an interesting experience.
No doubt, this is certainly feels like a turning point in history, and well, all we can do is really hope that New York and other cities around the world have turned a corner, and as those curves start to flatten out, perhaps there is a little bit of light at the end of the tunnel.
Yeah, absolutely.
All right, well, let's talk a little bit of background on yourself, Hugo. So let's just bring us up to speed before we start to talk about the LGO Group and the digital asset exchange. So, yeah, where are you from, and what was your path that brought you into the crypto asset space? You came from the traditional markets, right?
Yep. Actually, my background is I have a scientific background, a math background. So I studied math in France. Did a master's in applied math. So that's where I come from, and through mathematics, I got interested into the financial markets, the traditional ones. So I worked a little bit in the FX space. I worked a little bit in the equity derivative space. So that was an interesting experience. And somewhere around 2014, I'd say, I learned about blockchain, looking at computer science, and so really from the technical aspect, and the mix of what I learned from the financial markets and what I learned in terms of technicals, and so math, computer science, blockchain as well. So that kind of interested me, and I started trading a little bit of crypto on my side, doing some stuff in the space. But things really took off when I arrived in New York, which was something like 3.5 years ago, where I started working for a cryptocurrency hedge fund. So it was before the 2017 bubble. So there was not a lot of hedge fund at the time, and we were a big hedge fund. We had $100 million in AUM, and we were doing arbitrage on exchanges. There were not that many exchanges at the time. And the spreads were huge, so we could arb the market just clicking on our screens, which is unbelievable today because there's a level of sophistication which is associated with arbitrage today, which we didn't have at the time. So that's how I got started professionally in this space, and doing so, I met a couple of person in New York, including my current business partner, with whom we started LGO 3 years ago. And fast forward to now, LGO. So we have an exchange for institutional traders. We have 50 institutional clients, 15 different countries. We're doing a lot of other services as well. But yeah, that's basically my path from start to now in the crypto space.
Okay, sounds great. So, well, let's understand what LGO is then. So, you guys describe yourself as one of the biggest European institutional exchanges, and you said you had I think, over 50 institutional clients. So are you institutional based only? So is that who your clients are?
Yeah, so we have a couple of we actually have a couple of retail clients, but they really like the focus in terms of commercial efforts and in terms of the product that we offer when it comes to the exchange has been institutional. So I'm not talking about pension funds and large traditional asset managers. Really, what we're talking about when we're talking about institutional investors in the crypto space, it's all those professional actors that trade crypto as part of their business. So you have hedge funds, you have prop shops, you have lending desks, OTC desks, asset managers, payment providers, miners, all this ecosystem of companies that do business in the cryptocurrency space and that need a venue where they can have the kind of institutional level of service that they need for their business. And that's what we do.
What's the kind of grand vision here? Like, are you a believer in, I guess, the decentralized internet future, or the capital markets version 2.0? What's the sort of the grand vision of where you think digital currencies are going? Where are capital markets going, and how are you trying to build this future out?
I think we're right at the intersection, and our vision, what I personally think about this space, it's we're not reinventing the wheel at the end of the day. The capital markets are structured in a way which makes sense, and there's hundreds of years that have stress tested the current structure. So some of the capital market infrastructure is good, and that's something that we should take and implement in the cryptocurrency space. So that's the first part. But on the other hand, it's a different asset. It's a different asset class altogether. Different kinds of clients, different kinds of technologies as well. So decentralization and the use of blockchain technologies, it's another layer that you need to put on top. So really, what we do believe in and what we're trying to build, it's not only just an exchange; it's a complete capital markets infrastructure for all kinds of digital assets. So today we're very active in Bitcoins and stablecoins, but tomorrow when there's gonna be more and more tokenized assets and tokenized securities and things like that, we want to be active in that, and we want to be providers of capital markets infrastructure for those new assets and those new technologies.
Okay, so you're building a bridge, I suppose, between the legacy markets and the capital markets 2.0. I think that's a nice way of describing it. So what do you think are the main obstacles at the moment that we need to build a bridge over to get that increasing adoption of crypto assets, through, I guess, both to the mainstream, but also particularly to professional traders and then the institutions above them?
So right now I can think of two main hurdles. The first one is obviously some education. It's only been 3 years since 2017, and before 2017, very few people knew about Bitcoin and blockchain. And right now you have central banks that talk about issuing CBDCs and assets like that. So we've gone a long way in just 3 years, but still you still have a bit of a bias, especially towards Bitcoin, which is still a little bit associated to money laundering and things like that. Whereas if you look at the facts, it actually can be cleaner than cash. A coin can be cleaner than cash. So, there's a bit of education to be done, what it represents, why it's similar in terms of its value to gold, how you can use it with real life use cases. So that's the education part, which has been, a lot of things that have been done on this front, but still, I think we need some kind of education for a couple of years now for it to be completely normal for, let's say, traditional traders. That's one thing. And the second thing, which is actually I would say the biggest hurdle, is the actual technical infrastructure to be able to, for an institution, for a trader, for a company, or even for a retail investor, to be able to hold, use, and transact with digital assets seamlessly. When you look at blockchain as a technology, it's still relatively non-user friendly. Setting up a wallet, if you don't really know, if you're a total beginner, it's quite it's quite difficult, setting up a ledger, understanding what it represents, or even like setting up a web wallet. It's not so easy, pushing a transaction on the blockchain, same thing, not so easy to do. So, all those kind of layers that make the whole technology and the whole, let's say, handling of coins and transactions on the chain. If we have companies and if we have protocols and if we have products that make it easier for the end user, well, that's going to be a game changer for the whole industry. And that's why I'm we're particularly interested in all those projects. Just to give you an example, there's been the French central bank that has done an RFP for French for a euro stablecoin. So that's very interesting, because if there's a central bank digital euro, what that means is that all the companies which are not in crypto, but all the companies that want to use this euro, they need to upgrade their infrastructure to a blockchain-based asset. And when they do so, well, it's obviously way easier for them to accept cryptocurrencies such as Bitcoin, to pay in cryptocurrencies, to hold cryptocurrencies as part of their business. And so that's really the kind of shift that we need in terms of infrastructure for crypto assets to become mainstream.
That's right. That's nicely said. And I think, there's a lot going on at the moment. Just, for the last, I guess 18 months or so, we have seen the rise of stable coins. And then, of course, Facebook's Libra proposal really moved the discussion along and really brought the wider crypto asset discussion to the mainstream, certainly for a little while last year. But now with the current economic crisis, if you like, with under the COVID-19 pandemic, there's people like I saw Jack Dorsey was talking about potential ways that Square could help, for example, in terms of getting those payments out to people in the US. And do you think that the current economic crisis is going to accelerate some of these trends, whether it might be a central bank digital currency or just the rise of stable coins?
I do. And as a matter of fact, when you looked at the draft proposal that was showed to the U.S. Congress for the whole COVID package, it included in the very first version a plan for a digital dollar issued by the Fed. Because as a matter, what the Fed is leading right now, or where the U.S. government is leading right now, is a logistical nightmare. Because if you need to send dollars, whether it's checks, whether it's loans to businesses through this program, which is called the PPP, to which Square has proposed to participate in. So just sending this amount of checks and this amount of loans, it's very, very difficult if you have paper money, or almost like paper money, or digital bank money. It's very difficult to have a vision of who you send it to and how you send it. Whereas if you have a blockchain-based asset, and you know exactly that for each company and each individual citizen, there's a certain address or a certain wallet which is associated to the citizen, then it becomes super simple to send money at once. And so I think that's those kind of constraints that were unheard of a couple of months ago. Well, now you have this big logistical hurdle, and that obviously spurs the adoption of the technology. So for that, it's a good thing.
Yes, I think that's right. And while, those proposals are out there and the discussions are happening, at the same time, it's difficult to have too much faith in the US government at the moment. Just looking from the outside, and look, I don't want to cast any political judgments over the US. It's difficult for me to do that from a long way away in New Zealand. But there's just so many wheels to put into motion and things to bring together for any of this to really happen in the short term, right?
No, yeah, absolutely. I do agree with you. But that being said, it's not something that's going to be done in a couple of days, in a couple of weeks, or in a couple of months. But when you think about it, the idea has been thrown out there. People have been through this, and that's the kind of the idea that sticks, right? So when people have more time, when the whole crisis is over, that's going to come back on top of of the priority list to adapt to those technologies. So I think people at the Fed, the U.S. government, or any government that or any central bank that is looking at the use of blockchain as a technology for these kinds of use cases will probably rethink their priorities in the months or years to come.
Yes, that's right. And look, that's just how history works. We go along business as usual, and then some kind of black swan event will hit society, hit the earth, and things change, and narratives can shift very quickly, and there'll be some kind of momentum shift, and we'll just have to see how this plays out. But one thing that I do think would need to improve, and I've seen you talk about this a little bit, Hugo, is this idea that the crypto market structure as a whole is a little bit limited and perhaps a little bit fragile. And we saw this back in March, right, when Black Thursday, which was this event, March 12th, when really all global markets crashed as the COVID crisis really began to hit, and Bitcoin and other crypto assets, of course, were not immune, and they were hit very hard as well. And so I know you've written an op-ed on your views on what happened during Black Thursday, in particular for the crypto markets. So yeah, I mean, do you want to dig in here and talk about what you think happened? And
yeah, absolutely. So I'll start off by saying that like the cryptocurrency space, it's all about decentralization. But actually, when you look at the trading infrastructure and the capital markets infrastructure, it's actually very, very centralized. It's centralized in terms of flows. It's centralized in terms of risks. And more specifically, when you look at trading per se and what happened in March, there's a lot of risk, which is concentrated on a few different platforms. It's quite interesting because you see the effect of an over leveraging of the whole ecosystem and of traders, and you see it's actually very logical to see how the chain of reaction started from a price of Bitcoin which was normal to a price of Bitcoin which got halved in a couple of minutes. So basically, what happened when you look at the way the price discovery for Bitcoin works, well, the price does not come from anywhere, and there's thousands of different platforms on the internet where you can buy or sell Bitcoin, but they all have more or less the same prices. Well, there's a specific reason why that happens. It's because you have traders, and you have arbitrageurs, and you have market makers that spend their days market arbitraging the different platforms. If they can buy low on the platform and sell high on the platform, they make the spread, and that's a good business to be in. So it's this kind of invisible hand on the whole Bitcoin cryptocurrency economy, which basically makes the price discovery something which is quite uniform in a market which has so many platforms. So now the second thing is that those traders, when they arb the different platforms, well, actually they pretty much all use the same platforms to hedge themselves. They need a reference price, and the reference price they're going to use comes from a platform which is both liquid, so where they can trade a lot with a relatively low cost, and which provides them with good financing options, meaning that if they don't have a lot of capital, they want to be able to trade a lot. And so the platform has to provide them with these kinds of financing options. So that can be margin trading, that can be synthetic instruments like perps, that can provide up to 100x leverage. And so you end up having the whole market, which has prices which are derived from a couple of platforms, the biggest one being BitMEX, where basically all the arbitrageurs and all the price makers essentially hedge their trades and use this platform as a reference pricing platform. So now when you look very in detail at those platforms and how they work, Well, they're leverage platforms, right? And so if the markets move, that means that if someone is leveraged 100x, if the market moves by 1% in the wrong direction, well, basically they lose everything. So there's a security mechanism which is inside the platform, which is a liquidation engine, a deleveraging engine, that basically closes the position on behalf of clients and takes the collateral of the clients that they've put on the platform to basically make sure that the exchange or the platform doesn't lose money. Well, what happened in March on March 12th is that there was a lot of volatility, obviously, which was due to the traditional capital markets and what was happening in the stock market. There was a lot of volatility, and that impacted somehow the cryptocurrency market. And there's a couple of hypotheses as to why that happened, and we can come back to that. But bottom line, there was a lot of volatility on the Bitcoin market as well. Well, the thing is that there was too much volatility on an exchange like BitMEX, which triggered a couple of liquidations and deleveraging of the whole structure, and that led to a chain reaction. So you deleverage a position, that means that you have to sell Bitcoin on the exchange. By selling the Bitcoin on the exchange, you increase the volatility, so you add more liquidation and so on and so forth. And so at some point, and there's a very interesting study by Multicoin Capital, which is done on that. At some point, you had $200 million that had to be liquidated on BitMEX on an order book that had only $20 million in terms of bids. So if BitMEX hadn't stopped at the right time, theoretically the price of Bitcoin could have gone to zero.
I remember this day well, Hugo, because here in New Zealand, obviously we live in the future. We are one day ahead of the rest of the world. So the date, while it was Black Thursday, March 12 for most of the world, it was actually Friday the 13th here in Auckland. So it was Friday the 13th in the morning New Zealand time as this was all taking place. And I actually recorded 2 podcasts that day. I had them booked, and I really wasn't in the mood to be trying to record podcasts. It was quite difficult because, the world was literally on fire around us, and Bitcoin was absolutely dumping. And I just have this vivid memory of sitting at my computer with a microphone in front of me about to record a podcast and just feeling like I wanted to vomit. But it's that old saying, if you're looking at the markets and you feel like you need to vomit, then potentially that is a good time to try and buy something. And from that perspective, that is probably true. But, the fact that we did see BitMEX effectively have to pull the plug, that's not really a good thing. And it is, but we did see this happen in the stock markets, of course, as well, when those automatic triggers hit when the market dumps by a certain number of points in a certain period of time, right?
Yeah, exactly. That's what you have in the traditional markets that you don't have in crypto. Those circuit breakers that simply stop the exchange when there's too much volatility, essentially to avoid the kind of things that happen in the crypto space. But yeah, the maintenance, the technical maintenance of BitMEX effectively acted as a circuit breaker. And to be honest, I think we're quite lucky that we had this maintenance that was scheduled that had to happen at this precise time, because God knows what could have happened if things would have gone on.
Yes. So what's the way forward then here? How do we resolve this? Because the crypto markets are inherently volatile. That is just one of the key characteristics of the crypto markets to date. And I suppose you could argue that we are witnessing and participating in the monetization of a brand new asset class, and the path to completing that monetization, by its very nature, it has to be volatile. There has to be a reason for people to come in and get involved and look to try and make profit. And so volatility is a big part of that. But what comes next? What's the path to having sufficient liquidity across the globe that these kind of events are less likely to happen?
Well, I think it's a combination of 2 things. The first one is is a decentralization. So meaning using more platforms like BitMEX, where or more exchanges basically, where large traders can hedge themselves, and that's extremely important. And the second one is probably a better approach to leverage and counterparty risk, and that's something that we've seen. You have lenders in the space like Genesis Capital that publicly say that they don't origin new loans, and so there's been a big overhaul on how risk is being approached in the space. And like luckily, like things have logic in life, right? Meaning that if a market maker got beaten on BitMEX, well, probably they're not going to want to trade it on BitMEX anymore. So they're going to go on another platform, and they're going to rethink the way they think about their leverage. So it's in their interest. And so I think what we've seen, at least that's something that we've seen with our clients. There's been a big work and a lot of thinking. The 2 weeks after this crash, as to how as a client, how as a trader, you think about the counterparty risk you want to take. So what platform you want to use, what kind of leverage, you want to have on your strategy, so that you can maximize your profit, but at the same time you can lower the expectancy of your collateral to be completely wiped out. So yeah, that's those are the two things that will probably move the market to a next step.
Sure. The counter argument to all of this, of course, is the narrative that one of the key reasons for Black Thursday, not just in crypto assets, but across all markets, was really just this idea that there was an institutional sell-off, a flight to cash, and a de-risking of any risk on asset markets, right? So do you think that narrative plays into what happened?
Yeah, I do believe it's true. I mean, when you look at the market, like the cryptocurrency market, the biggest movements are done by institutional traders, but most of the volatility is brought by retail traders that come in, come out, that react to a certain news or another. I don't know any of our clients that would. And perhaps I'm exaggerating, but I doubt that any of our clients would have, planned for the Bitcoin price to go up when the Chinese president said that they would use blockchain in their central bank. But that's what happened, and that's a typical retail move. So the price of Bitcoin and the volatility is very linked to the retail activity. And you're right, when there's volatilities in stock markets and in any kind of market, on oil, on everything around the world, well, it gives people they want to pull their assets out in cash. And so I think, and that's an hypothesis that I haven't proven, but I think that what triggered the volatility at the very beginning of this episode on March 12th is a retail reaction to the volatility on other markets, right? So you're getting beat by the stock market. Well, what do? You're looking at your Bitcoin holdings. Well, perhaps you're going to sell a little bit of Bitcoins to get some more cash, and you multiply that by the number of people that actually did that, and you have a big enough volatility on the downside to trigger the rest.
Well, Hugo, let's just look forward a moment then now. So obviously we are right in the beginning of what could be a very, very serious global economic downturn, certainly a recession. There's talk of a depression. The unemployment numbers are skyrocketing all around the world. These are strange and uncertain times, but the central banks are responding by effectively printing money, and they have little choice but to do anything else. So they'll do what they can to try and mitigate the damage. But what do you think this means for the digital asset markets going forward for the next 12 months or so? And I guess I'm particularly talking about Bitcoin. Of course, we have the Bitcoin halving is now. Look, it's less than 30 days away. It'll happen sometime in probably the first half of May, so that's less than 30 days away. Look, just interested in your comments, Hugo. I know it's speculation, but any thoughts on what you think happens for the digital asset markets in the month ahead as we go into the third Bitcoin halving and what happens afterwards?
So I think it's definitely make or break times for the digital asset space. When you look at the promise of Bitcoin and other cryptocurrencies, but more specifically Bitcoin, you have a currency which is not controlled by a government, which has a fixed inflation, fixed supply, and that you can exchange in a peer-to-peer fashion. Well, you have inflationary policies everywhere around the world. So in the US, especially in Europe as well, you have almost debt monetization in Europe, and God knows where that's gonna go. But so Bitcoin having a limited inflation, this is from a pure economic perspective, it's a very good time for Bitcoin. Now the second aspect of that is, I don't want to sound too pessimistic. I don't want to have a hypothesis like that, but we don't know what's going to happen with the whole system, with the banking system, with with the ability of people to actually use their cash, which is at the bank. You have countries like Lebanon where in the recent months it's become difficult for citizens to withdraw the cash from the bank. I think they're limited to a certain amount in dollar, which I don't remember, but it's like you cannot withdraw whatever you need. You have a lot of countries, especially in Latin America, where you have capital controls. You cannot use your money as much as you'd like to, and I hope we don't go there. But it's probable that given the crisis, given the economic context, this kind of situation spreads to more and more countries. And when you think about digital assets, that's the perfect hedge, or that's the perfect tool for people to be more independent or to have more freedom if those kinds of things happen. So I think in the Bitcoins and Bitcoin and digital assets have a very important role to play for the people if or when those kind of things happen. So definitely there's a role to play in the crisis, especially if it's a trust crisis and a banking crisis, in general. But we'll see. Again, it's make or break. Bitcoin was made for that.
That's exactly right, Hugo. Bitcoin was born out of the 2008 financial crisis, and you really couldn't have set a better stage for Bitcoin to really move into its own. Although, you would have to say that the circumstances are very sad and very worrying for everyone around the world, really. But I think you're exactly right. It is make or break time. So, yeah, interesting times ahead. Well, on that relatively somber note, Hugo, let's go to a very quick break, and then we'll come back and we'll finish off with the Crypto Conversation hot take round.
Whether you're an enterprise fund manager or a retail trader, buying and selling cryptocurrencies successfully requires price discovery you can rely on. Brave New Coin's liquid indices provide trusted US dollar prices for Bitcoin, Ethereum, and Ripple. Featuring end-of-day or intraday outputs, you can count on the BLX, ELX, and XRPLX for accurate US dollar pricing for smart contract oracles, settlement price discovery, net asset valuation, and performance analysis. Visit bravenewcoin.com to find out more.
All right, and we're back, and I'm with Hugo Renaudin from the LGO Group. And Hugo, I like to finish each Crypto Conversation podcast with a quick round of rapid fire Crypto Conversation hot takes. Are you up for it?
Let's do it.
All right, I just want your hot takes, your hot fire. Take your best shot. Here we go. Hugo, where do you sit on the Bitcoin maximalist to multi-coin opportunist spectrum?
From a personal standpoint, on the Bitcoin maximalist side of things, from a professional standpoint, I would say that I am pragmatic.
Yes, that is a very diplomatic answer, and I would expect nothing less. Hugo, what would you say is your firmest conviction crypto opinion?
Yeah, I would say that decentralization needs centralization. So I don't believe, at least in the short term, that a completely decentralized world, a decentralized ecosystem is something that could work. I think you actually need some kind of centralization. You need intermediaries to make sure that this happens. So that this whole, blockchain and crypto revolution happens. And so I do believe that decentralization for the sake of decentralization is actually counterproductive, but having some kind of centralization in this process is actually good.
Well, Hugo, you aren't an American, but you do live in New York. So I imagine you have a view on this. Look, it's contentious times, but I ask every guest this question. Who do you think wins the American presidential election 2020?
I don't have particular views on American politics, and quite frankly, I would have answered Donald Trump before the crisis, because I don't see good contenders against him. But we'll see how the crisis, the whole handling of the health crisis goes. But yeah, I would say Donald Trump.
Okay, makes sense. Look, we touched on this before a little bit, just with this discussion around stablecoins and potentially the use of stablecoins or blockchains as a means of governments being able to get payments out to their populations. But the sort of the next logical step on from that perhaps is some kind of UBI, Universal Basic Income, which would be an interesting idea if it was linked to a blockchain. What do you think about the idea of UBI as a potential fix, even in the short term, for the current economic crisis?
I think that's something that is actually happening in a couple of countries. It's uncharted territories, so we don't know what's the economic impact and what are the externalities. But I think that's something which is needed, as many people lose their jobs and have no prospect of being able to build an income in the short term.
Yes. Hey, couldn't have said it better myself. All right, well, Hugo, Bill Gates famously said, we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. Big question, but what do you think the world looks like in 10 years' time, or what does the blockchain space look like in 10 years' time? Approach it any way you want.
I like to compare the adoption of blockchain and the adoption of internet, and I think the adoption of blockchain will go faster than the adoption of internet, because it's you can use the internet infrastructure. So, in 2017 we were like in 1992, perhaps in internet equivalent. I would say that today we're probably around 98. So I would say in 10 years' time, something around. Will be around like similar to what internet was in 2010. So blockchain is an abstract notion. Like you don't have to know what a transaction is. You don't have to know like different protocols. You just know that it's on the blockchain. To touch back on what we were saying earlier, you have integrators of the technology in the everyday life. So a very easy user experience when it comes to writing to the blockchain, using blockchain data, and maintaining such a network.
Yes, indeed. Well, similarly, Hugo, William Gibson said the future is already here. It's just not evenly distributed. Can you think of an example of the future being here right now, but most people just aren't really aware of it?
Well, I guess Bitcoin is, people are obviously aware of Bitcoin as a trading asset, but I'm actually surprised to see that there's not a lot of people that are aware of how Bitcoin is used in some countries. So I'm biased because that's something that we do in the course of our business, but we have clients that use Bitcoin as a way to transfer money between different countries, like as a cross-border means, Bitcoin, Tether, and all that. It's widely used in Southeast Asia and Latin America. And so Bitcoin being a peer-to-peer currency that can be transferred over the internet, that this use case is actually quite widespread today, and a lot of people ignore that. And so that's the future. It's here right now, but not a lot of people know.
Yes, indeed. I agree with that, Hugo. Well, we're almost finished. Let's zoom out. What do you think is the long-term future for the human race? Do you see dystopia or utopia?
That's a tough question. I would say it's linked to how governments adapt to the technology. So the first thing, I don't think it's going to be like one or the other. There's probably going to be some countries or some states or some parts of the world that will be in a way, others in the other way. So dystopia versus utopia. but it will all depend on how the technology is harnessed. So, you know, whether it comes to data or just blockchain, you know, like if you take the example of blockchain, it can be a great enabler. You know, anyone can have yield on their asset, anyone can be their own bank, anyone can issue assets and sell them to anyone. So that's a big enabler. But on the other hand, if you use it in another way, it can be something where basically you have no privacy. You cannot do transactions to anyone because I mean, you can do transactions only to specific people, and if you do transactions to someone you're not authorized to do it, you know, the state will know. So it can be a big enabler, or it can be 1994, and it just depends on how the governments harness this technology.
Could be 1984, or it could be Brave New World, or a little bit of both. Let's finish this off though, Hugo. Finally, what is your favorite science fiction book, film, show, or universe?
I would say life is my preferred science fiction. I mean, what we're living these days, it's completely crazy. I mean, it's completely unheard of. And in general, you always have fun stuff to learn from life, and I think that these days particularly are extremely interesting, extremely tough, but extremely interesting.
Yes, that's a great way of putting it. We're basically living a sci-fi movie at the moment, hints of dystopia certainly. So look, we're only midway through the movie. We'll see. Hopefully we get a happy ending.
Yeah, absolutely.
Hugo, look, the microphone is yours. Take us out. Please tell the people where they can go to find you on your various platforms, and where they can go if they're interested in finding out more about the LGO exchange.
Yeah, absolutely. So you can follow us on Twitter. You can join our Discord server where we have all of our community, or you can just go on our website, which is lgo.group.
Fantastic. Well, all the best to you and your team, Hugo, and of course anyone who's on the ground in New York. We're thinking of you, and hope for better times ahead. All right, well, there you go. Thank you for listening. That was today's show. Thank you to Hugo. Thank you to the LGO Group. And once again, shout out to anyone who is based in New York right now, like Hugo, and really getting buffeted by the worst of the global COVID-19 pandemic. Here in New Zealand, we're squashing the curve. Not too many cases here, actually. You'd have to say that New Zealand has been one of the better countries in terms of the number of people that have even come down with the virus to date. We've been under what we call a level 4 lockdown, and that is expected to lift just next week. I think we may move down to level 3, although that's unconfirmed. We will just have to see. Anyway, thank you for listening. We'll be back next podcast. The next podcast, fingers crossed, it's actually going to be with a rapper who has released an album about Bitcoin, a rap album, underground rap album by a rapper, I think DJ Skrilla. Anyway, listen out for that. That should be the next episode, fingers crossed. But for now, we are out of here. This was the Crypto Conversation for Brave New Coin. Stay